Welcome, everybody, to the Confessions Podcast, episode 24. And this is it. I'm your Master of Ceremonies, Chris Sweeney. And we're also joined by the ceremonial master, Mr. Hugh Hendry. How are we, Hugh? Is St. Bart's treating you well?
I'm now loving my microphone. I am waiting on the boom, but you know what? I recall Central Park and Fall, how you tore your dress. What a mess. Do you remember that from Ferris Bueller's Day Off?
No, I've not. I've seen it. Is that with Matthew Broderick? Is it Broderick? Is that, am I saying that right?
Yeah.
Yes.
Who's what? He's married to Sarah Jessica Parker, I think.
Sex and the City.
Sex in the City.
Mr. Big, everybody hold that thought. Mr. Big may come into this conversation as we go on. But sorry, carry on here.
But I guess I'm a little bit older than you. That was the iconic standout movie of being kind of younger, you know. And when he sings that, I think he sings it in the shower.
Right.
Anyway,
is it a bit like Risky Business with Tom Cruise, like the parents are away and he sort of has a bit of a wild time? Is that kind of similar?
No. It is way above that. He's definitely he's taking time off school, and it is the juxtaposition of what school and regimented thinking teaches you, and then filling the gap, filling the wide chasm of your curiosity and being out there, like feeling and touching real life.
And if anyone can imagine that Hugh took time off school and never went to classes or didn't go to lectures, you think Hugh's this maverick guy who didn't bother, you'd be surprised that Hugh was like extremely studious. Hugh, you did not miss a minute of school or lectures, even if attendance wasn't recorded, you were there. Is that correct?
That there is no irony. That is 100% correct. I mean, this is why I keep maintaining I'm living my life in reverse. I am determined to catch up for all the fun I missed. I mean, I remember, some girlfriends saying, "Hey, let's do this on Friday afternoon." I'm like, "What? I've got classes to attend. And I've got my notes to write up, and I've got to reflect on things. You know what? So I was the most studious. I was on a mission to escape, to get out, and education was going to be my passport. And
did you live more of a sort of regimented, studious life in high school than you did when you were a hedge fund manager?
Yeah. I mean, in terms of absolute extreme. I was an iron bar. There was just no flexibility in my spirit, in my internal. I was wound so tight. Even to this day, I'm wound. I'm definitely wound tight. I have to say, again, narcissism is all about me, but I have started taking lessons for the electric bass guitar, and yes, sure, it's a giggle. It's a point in your life. It's another midlife crisis. But I tell you, it is meditation. Whatever tension that you have in your body, you are going to communicate that to the instrument. You're going to hear it. And just now, I'm just doing, I think I'm doing 4 or 5 chords, and I'm doing it on a metronome, and it's the most relaxing, calm, fantastic thing I have ever done. It literally uncoils the spools inside my head, and it creates space. Yesterday, I mean, where was I? Like, I think it was Monday night. Yeah, Monday night. I did the best surf session ever. Like, so surfing for me on the stand-up, I'm looking for really baby waves. You don't need much on the stand-up. Just need a bit of energy in the wave. Less than a meter, no wind and no one else, and the sun going down. And then the next morning it was yoga, and then in the afternoon playing the guitar. And I thought to myself, if I see you behaving like, my wife calls me a CUNT, she's just like the most miserable mother, and she's like, and you've got no reason. Look at you. So, and I was like, she got a point. But I am, as you know, I'm still regimented. I will sit at this. This for me now. This is we're 1 o'clock. I'll be here until 10 o'clock tonight. I'm like that. But and I was telling you about and so that's why this kind of crazy. I was going to say diet. It's not a diet. It's a regime for enjoying the longevity that I'm determined to pursue for the rest of my years on this planet. So yeah, I can pass the day without eating. But I have to say that in itself, and these chemical legitimate supplements that I am taking, I have on less and less calorific intake, on things which are kind of slowing down forms of my metabolism, and others which are increasing the mitochondria, which is like the energy cells. I've never had more energy. I really lit up, and I've never felt more content in my life. This year has I am blooming this year. But anyway, I'm being blooming boring. So let's move on.
Well, no, I take it as a compliment that you're blooming in my company. I think that's quite a nice thing. It's I like to think that I've helped make you bloom a little bit more.
You have taken my hand, Chris, and you've taken me. You took me to the Valley of Happiness. We stood on a mountain looking onto this verdant valley, blooming with.
I'm glad you said hand there. I'm glad you said hand when you said I take you to the Valley of Happiness. I'm glad you said hand.
You said, Hugh, this could all be yours if you were just willing to let it go a little bit. So I'm letting it go, and thank you, Chris. You are the true Wizard of Oz.
Absolutely. Well, I think what's interesting, if anyone's got any suggestions for anyone that could join Hugh in a hedge fund supergroup. So obviously we've got the bass player. Obviously that's Hugh. So, but does anyone out there get any suggestions for any hedge fund managers that we could slot in? Maybe Soros on the organ, maybe. What do you think? Or the kind of electric organs, that type thing?
Well, I've got my little collective, and think of me as being Soros on the bass with the Rolling Stones. I'm afraid I ain't looking for any. I spent way too long with the financial community, and that ain't my tribe, believe me. So,
Chris Holm,
no, thank you.
Chris Holm on vocals? No, Chris Holm on vocals, maybe.
Shut up, move on, Chris. Chris, I love you, but you're not invited.
Fair play. Well, I wanted to ask you, we spoke recently about the hedge fund Oscars. Now we've got coming up Miami Hedge Fund Week, and it's billed as a bit of an extravaganza where everyone gets together, and they describe it in their sort of release thing, saying they pitch ideas, they listen, they hobnob and gossip, all to get a sense of what's popular and where the smart money might be moving. Hugh, is there such a thing as smart money, and is Miami Hedge Fund Week a big deal, or is it all just marketing, PR spin?
For sure, there is a thing called smart money, and I think we've reflected on some of the big beasts who excel in this space of risk taking. The event that you refer to is marketing spin. I mean, it's a zoo. It's a bun fest. It's a money-making, crunching machine. So there are literally tens of thousands of family offices, and the temptation is to get some proximity to managers. The managers you're getting proximity to, maybe I'm sure there's going to be up and coming, and so why not? I mean, mostly conventions and conferences of that nature in America. You have to remember, Americans don't get the holidays, the contractual holidays that the socialist nations of Europe insist on churning out to everyone else. And so this is why America has more conferences, and this is why they're typically on a Friday. You get to go away and then you let your hair down. And what did you say? They're playing golf.
It's a 3-day confab at a golf resort northeast of the beach.
There you go. So I am aware of that, because in the slipstream of that, just before it, I used to attend an illuminati, which was best money, The great and the good of the macro hedge fund community were invited to a very, very select annual gathering. I'd been going to that since, I want to say, 2006. it had taken place. I'd presented in Milan, I'd presented in Hong Kong, I presented in California 2 times. And I had presented in my, it then kind of for about 5 or 6 years was switched to residency in MIA and in Miami. That's the airport handle. And that was real. And I think it's a thing of legend because there were more macro hedge fund managers wishing to attend than ever attended. That's how select it was.
Very interesting. Well, people, I won't mention the B word, but there is an epic story from one of those Miami trips, isn't there? It's actually more of a saga. It's a whole day where a lot of weird stuff happens to you, Hugh, and you have a escapade in your bedroom. Nothing extra. It just, I don't mean it that way. And then it kind of develops there. And then there's an ending where the law authority is involved. But we'll let you enjoy that in the B word, people. In the B word. It's
a true Wolf of Wall Street, I think, chapter, that one.
Absolutely.
But the meaningful thing, and that's jazz and razzmatazz and whatever. But the meaningful thing was the question: why were the best of the best willing?
To share their ideas. Because as a layman, I'm thinking, why would I tell you what I'm doing? Because I want to make it. I've got the angle. I've got my plan. I want to make all the money. Why would I share it with someone else?
Exactly. And, Coca-Cola to this day has not shared the magic formula. It's a secret. Okay. So why does it work in the world of hedge funds? And it brings on again, it brings on the nature of risk taking. So it is like, this conference is like an academic peer-to-peer review. Okay. So it's your peers who are reviewing your best idea or your current idea, the idea which is dominating your portfolio. And for sure, there's a cock-a-doodle-doo, there's a cockerel thing. Like way back in the early days when I was in Edinburgh and I was working with people I had just such great admiration for, when I felt I truly got an insight, I truly found a way of understanding the future, which made me want to buy or sell a stock. I'd write it up, and I wanted to present it to my peer group. I wanted to kind of show off. I was like, this is kind of cool. What do you think? And for sure, 6 times out of 10, they're like, but I had so much respect for them that I wasn't dismayed. I was like, okay, well, I'd rather know. And that's what's going on. It's mutual respect. And when you are leading a large organization, the danger, and it's inevitable, that you will find yourself increasingly surrounded by sycophants who will applaud rather than challenge your decision-making. That doesn't happen at a conference of the Illuminati. I have seen some of the great managers who will remain nameless, shredded, absolutely taken down. And they love it because fine, okay, it's like, okay, noted. Message to myself, might have to do a bit more work on this. Better that you find your errors quickly than they rot and stink out your portfolio in the manner of poor performance. Now, on the contrary, if everyone is kind of rushing to pick up the telephone, hey, buy me a yard, right? Hey, cool, because you know what? You're there already. And if they're buying a yard, where's the price going to go? You're front running the room. So it kind of works both ways. And that was the genius. But believe me, there were back in the very early days, there were no clients. It was just the boys and girls taking the high octane risk and trying to work out what happens next.
But it's interesting that you're already locked in, you've got your position. And of course, if everyone else agrees, they only help you because you're already in there first. Now, let me play devil's advocate here, or not maybe devil's advocate, another situation. You're in Eclectica HQ in your office in London and you're discussing ideas, which I'm sure you did. Of course, you were the boss, but I'm sure you discussed it. What's to stop someone coming up to one of your junior members of staff and saying, here's 10 grand. What's you thinking right now? Like, what's his ideas? Does that happen in hedge games? Do other people, junior people, sort of give infiltrate and give sort of secrets away before the other manager they work for has got it locked in? for their own advancement? No.
Where can I take that? For me, I offered full transparency. I was on. We may touch upon this. I'm going to show you a clip from CNBC later. I was on CNBC, if not weekly, then bi-monthly, telling people I had no secrets. These are huge liquid markets. I'm like, this is what I'm thinking. What do you think? And actually, on television, I was doing it on television because of the preposterous time for it. Like they'll take 30 seconds to ask you the question and they want you to answer it. They want you to sum up all of your lifetime's knowledge in about 12 seconds. And that's when you truly, there may be a longer period of time necessary for the gestation of a profit to legitimize your activity. But if you can't nail it within the precise nature of that TV gap, that TV window, you don't know what you're talking about. That was my thing. Now, the American community, financial community, is a little bit more. They don't get. I think it's a fault of this. They don't get it. It's all secret. It's all proprietary in terms of stock positions, and on a quarterly basis, all participants have to issue. It's called a 13F, and it's a table of your largest positions, and so you've got to declare that to the SEC, and those files are downloadable. And so every quarter you'll get magazine articles of financial kind of internet stories about XYZ is long or short the stock. Kind of who cares? I can see the point if you are trading mini micro caps, and of course we talked about the great and inherent dangers of being short those meme stocks that occurred at the start of 2021. But that's a risk that you're taking if you're pushing yourself down there. So, and then finally, the investment banking community, the people who are putting on these trades. I mean, things leak out. The desks know what the hedge funds are doing.
Okay, I was going to ask you about something else, Hugh. So let me ask you, Peloton. I think we all know what Peloton is. It is a very luxurious form of home exercise. You can get a bike or you can get a treadmill. And if anyone, we can maybe link back to the show Billions right now. So I don't know if anyone's seen Billions. Hugh's always said it is a very good way of getting into hedge funds. It's very realistic. It shows you a lot of things. Well, Bobby Axelrod, who I think, let's be fair, there's a few rumours that Hugh, that you were one of the, what do you call it? One of the inspirations for Bobby. You're one of the people who make up certain characters in Bobby in Sex and the City. Same thing. He had an issue on a Peloton thing, so they weren't too happy about that. But that's not really why we're talking about them. The reason we're talking about them is they're having a bit of a slide at the moment. And why is that? Because Peloton seemed to be such a great company. It was luxurious. It was cool. What could go wrong?
Well, yes, indeed. What could go wrong? Well,
because the subscribers has gone up. If I can just say, sorry, in 2019, 500,000 subscribers, 2020, million, 2021, 2.3 million. So it seems seems to be going in the right way for the initiated, but not in the financial markets.
Well, we can see that on the back of those fantastic subscriber additions, the stock traded from the low 30s. And it traded 170, which is to say it was almost a six bagger. But it's a little bit, we discussed this in the context of last year's vintage of IPOs. Let's see if IPOs are on sale. Let's go back. Here we have Oatly. Oatly is the non-lactose milk. You can froth it. You can have your cappuccino. I've gone back to just black, back to black, baby. But, Oatly IPO'd at 28. Today, it's yours for about 5. 5, Chris. So you've lost like 75% of your money by falling in love in Central Park. We've been trading dresses.
I mean, Oatly had a problem because, they were actually talking about in Britain, they've actually had a problem with their advertising because their green claims are very much the extremes. It's not the average of the products. It's not each individual. So they've had a bit of problems with that. I don't know if that's hurt their credibility partly as well. I'm just chucking.
Well, I think they have had problems, and one of the things I would advise anyone is look at the shelf date. That stuff can sit in a cupboard in your house for years. That ain't good. That ain't natural. Natural things have a lifespan. Okay, that lifespan is chemically induced. I cannot say it's chemically induced, but I can only say that personally, I try and avoid things with very long lifespans just to keep everything above and proper. And then you have Deliveroo, to those not in the UK. This would, oh heavens, I can Uber Eats equivalent, and they're
isn't that American one Dash something?
Dash, yeah.
Dash, Dine Dash, or what did they call it? Is it Dash?
Dash rings a bell. Maybe you can Google search that.
Yeah, let me
but this is the Deliveroo version. Came at the market at 300, and again, it's halved. This is the slaughter of the innocent. Now, the innocence. Let me stop.
DoorDash is the American version. DoorDash. Yes.
DD. DoorDash.
So basically, anyone that doesn't know these things, I'm sure you all do. Essentially, you go online, you pick food from a restaurant, and a woman or a man comes round on a bike with your order about half an hour later.
So what is happening, Chris? Yeah. I had a general rule, which I pretty much kept to. I did not participate in IPOs. Yeah, just didn't do it. Okay, why? My thing was,
can we tell people, anyone to interrupt you, anyone that's not familiar, IPO is an initial public offering, which means that a company that was private, they're about to go into the stock market, and essentially someone has to buy the shares for the first time, and it's the first time you can buy shares in a company. Am I summing that up quite well, Hugh?
You are. Yeah. What I would like to add on top of that is an insider, for the first time really, is choosing to sell some of their precious stock. Okay. I'm a bit of a kind of cynical SOB. I'm like, there's a story. Like one guy wants to sell. Okay. And I kind of want to say, why? And if you know the business better than I do, and you want me to buy it, I'm like, no, don't know. So one of the filters, the risk filters that I applied before buying was I was a, what do you call that? Who's what do you call the doctor that looks at the cardiograms when you're in hospital and you've got that plate and it's got all the zigzags.
Cardiologist.
A cardiologist.
Think of me. A heart doctor. Yeah.
A heart doctor looking at your cardiograms. I needed a cardiogram. I needed to see the fitness of the community of if you will, these external, who knows, the insiders, the outsiders, everything was manifest in the genius of each day's trading price. And the more days trading price, which is to say 2 years is better than 1 year, 1 year is better than 1 month, 1 month's better than one day. The best thing is give me 20 years, give me 30, give me 100 years. I wanted to kind of observe how businesses had engaged with culture and how that had changed, and try and determine what the variables truly were. What were the risk factors that were determining when profits would exceed? What were the variables that were determining when profits would disappoint? You don't get that genius of information. To sum that up, I'm saying more often than not, I have always been rewarded by eating in busy restaurants in foreign cities. Like I'm never really attracted to passing an empty restaurant going, oh, I really feel hungry. Never done it, and I'm kind of okay with that decision. So IPOs didn't work for me. And that cynicism about, hey, somebody's selling. Well, the conditions early last year were absolutely perfect for a whole host of businesses whose environment had changed for the extremely positive, which is to say the global lockdown, people were confined to their houses. And so home delivery actually kept restaurants and cafes alive, but also allowed you to bring that restaurant feel to your home. And that was the essence of Deliveroo. The Peloton was the community, the energy that you could transport yourself to the gym with other people and beyond that running machine and all the plethora of other machines that they sold. That was exciting. Netflix, of course, had a huge bump. People just were watching even more of their content online. And so that was like an extremely good time to be selling. And markets are symmetrical. So if it was a really great time to be selling, probably wasn't a great time to be buying. Yeah. And so it's a bit like there is a wonderful book. I'm saying Will Self, not Will Smith. Will Smith is the Hollywood actor. Will Self is a cantankerous UK, let's call him an intellectual. And
he's a good guy. He's an author, isn't he? He's a nice, interesting guy. Yeah, interesting. He's always got something to say. Let's put it that way. Yeah,
and a smart wordsmith, and he did a short story, which was the quantity theory of insanity, which really, in fact, at that Illuminati, I did a speech one year which was predicated on the genius of it, and there was a kind of, there was a play on the George Soros, very famous George Soros book, which was the quantity theory of money, or wasn't that of finance? And so but I much prefer the quantity theory of insanity, which was saying, and is very apropos when we consider the stock price charts. But it was saying that there is a limited supply of, if you will, neurons in the world that can support thinking. And so just as one part of the community, tell me if I'm sharing the Netflix chart. Am I sharing the Netflix chart? Yes, okay. And you can see, this was, hey, reality's changed. This was, everyone is staying at home and watching Billions and Sex and the City and what have you. And this is, they're going back to work, they're going to the pub, they're going to the gym, and this is like confession, boom. And this is the market going, holy cow. Okay, so the quantity theory of insanities, there's only enough molecules in the universe to support sanity. So just as one community is getting it, by implication, another community has to be losing it. Yeah, losing the rag, losing a sense of smartness. And I'm afraid it's okay to be Johnny hindsight. But if you invested in these businesses back in the day, you're now feeling the consequences.
But isn't that an argument that, people would say, okay, I signed up for Netflix. Are people deserting Netflix? I bought a Peloton. I'm not just going to throw it in the bin because I can go back to the gym. If I like oat milk or rice milk or whatever, I know Oatly do a whole range of milks. I'm not going to stop drinking their milk. Is it the future that the markets are pricing? Because it seems like, to me, they're not going to have a mass deflux of customers just overnight.
Absolutely. Great point, Chris. So it's a bit like Dragon's Den to those in the UK, Shark Tank to our American audience, where entrepreneurs come in and they go, okay, year one, we're going to make $100,000. Year two, we're going to make 3 million. Year four, we're going to make 5 million. Year six, we're going to make 10 million. And there's sometimes when the market or the experts go, oh, how much again did you say for year 5? 10 million? Okay, noted. And they just accept that. Okay. Their guard is down. Like I say, they're not infused with enough atoms for their mind to operate efficiently. And then the atoms change. Facts change, and the companies have to. Facts change. The confinement thing ceases, and then there's a new world, and the new world leads to a revision. in future expectations. So the problem with Oatly doesn't have a problem per se as a business. It will continue to probably expand, maybe at a little slower rate than was maybe imagined a year ago. The problem for Oatly was that the valuation associated with that story was preposterous. You were buying a milk company on something like 20 times revenue. I mean, it's just preposterous. Again, just insanity. And Peloton. So Peloton is different to Oatly in that it was responsible. Its executives were responsible for self-harming the business. Okay, so first of all, they put a moat around themselves, which is to say they issued special securities which gave them a disproportionately high ownership of the business vis-a-vis the amount of equity they owned. It's just naughty. I mean, that's a big red flag. It's like, that's scummy, right? And so they could just go and they could be fearless. And it's like, I want you to be, where's my pen? I want you to be here's my peg. I'm going to peg them. No, I'm not pegging them. I found my pen. Here's my damn pen. Here's my pencil, my really sharp pencil. Where am I here? You see, my really sharp pencil. And I've got it right. I've got it an inch away from your spine. I want you fearless. Go out there and, be brave. But know one thing. If you mess up, if you just take your eye off the ball, if you rest for a minute, money never rests. Money never sleeps. If you rest or if you get complacent with my money, boom, I'm going to make you feel it, you mother. I mean, forgive me. That's, you can see why I need to take melatonin and NMM. You can see why I've got to fast. You can see why I've got to play guitar and do yoga. And so when they take that away, get out of here. You're not worthy for my investment. And those bozos, and I'm just saying bozos, they bought the hype. With Will Self and the insanity theory, they're meant to be the smart ones selling. And the people who are buying from them are the dumb ones. There's a lot of truth to that. But the smart guys never get high on your own jobbing juice. Never believe the hype. These morons believed the hype. And they went out and they bought other exercise machine businesses for preposterously high prices, where they will never, most unlikely, will they ever earn a very commercial rate of return. So they destroyed capital, again, because there was no damn pen pressing against them. And so now there are hedge funds taking position saying, okay, this has got to end. This has got to end. You've got to go and you've got to seek a buyer. There was I suspect Peloton leaked this. That's a unsubstantiated rumor, but someone long the stock and trying to get out of it leaked the story that this would be a great business for Apple, to where that there's a history of Apple and Google buying wearables. They're trying to capture health, fitness, technology. Yeah. And of course the very good thing about Peloton was its subscription model. So you were paying a lot of money. It's like a gym membership subscription. And when you subscribe to gym, you don't go, but you kind of just comes out of your bank anyway. That's a risk-less form of activity, which an Apple would be interested in at the right price. And we're coming closer to the right price.
So if someone's sitting at home right now and they've shelled out, because these things are no cheap, these Pelotons. I mean, they were billed as premium kind of exercise machines. It wasn't your sort of $200 running machine. It was a proper bit of kit. If you've got one at home, should you be worried? Will it become a glorified ornament in time? Are we looking? Is this terminal, or do you think someone will come in and change this around, and you'll be able to still use your Peloton going forward?
The glorified dust collecting ornament is distinct from, is mostly distinct from the management of the business, right? I mean, that's a that's not a risk you take buying the stock. That's a risk you take buying the product.
Yeah, but I'm saying if they go out of business and you can't go to classes anymore, I'm saying is the business in danger of going up? I mean,
no.
You see the danger that it blows up? No, you think someone will take it over? Someone will
regardless of whether it's taken over or not. This is not a business that's going to disappear.
Okay.
Again, this is a business where we have reality, and then we have the Wizard of Oz, the other reality, the reality of people guessing the future, and that other parallel universe, that reality which is yet to happen, has just been mangled. It's just been subject to massive revision. But you're absolutely safe, and you should buy the product. I don't know if I can endorse the product. I've never tried it, but I like the idea. I mean, personally, I think you would endorse this. It's much better to get out.
Well, look what happened to Wags. Look what happened to Wags. He had a heart attack on it. So, and Mr. Big. If it can happen today, it can happen to you people.
Indeed.
Oh, and also you forgot to mention you put out a Twitter post or a Twitter thread. Sorry, is the right word. Yesterday, and that kind of links what we've just been talking about, because you talked about the slaughter of the innocent. So it sort of lines up a little bit with the Pelotons and the Oatlys and all that sort of stuff about things going on in the world. And you referring to that you want to buy a golden ticket. You want to go see Mr. Willy Wonka in his famous chocolate factory.
Indeed. So let's go one step further and try and link it to last week's podcast, where you were inquiring, you were beginning to see headlines about a correction in risk markets, in the stock market. And so we were
talking about Cathy Wood, ARK, and then we went into the corrections.
Indeed. Yeah. And so I was telling you that there is a vernacular used by the financial press where a 10% pullback from the all-time high is deemed to be a correction. A 20% pullback is deemed to be a bear market. And so they're trying to kind of mark lines. They're trying to guess it in terms of trend change. Let's bring up the chart of ARK, because it's not had a correction.
Well, let me tease people the start of your thread. And this isn't, if you can imagine Hugh saying this, so you can imagine him as I'm saying it. Risk is resetting, things changing. There will be opportunities. There will be blood. Let it be the other guy. Let's get absurd. But first, come on, join me on Instagram, where I'm broadcasting every day. Tweeting's like dropping sand in the desert. And then he goes on to lay some pearls of wisdom.
Thank you for that, Chris, because yes, please, if you're enjoying the podcast, I have now committed to a daily drop of absurdity on my Instagram. And it has to be Instagram because it's just absurd. Twitter's got too much of a financial kind of, like the guys wearing their shorts with the belt and the phone holster. I'm mixing music, I'm mixing inspiration with fiction and images. Anyway, join me on Instagram, Hugh Hendry Official. So, but those threads, I am now in the process of transferring. I think those threads are, I hope you can find something in each of those threads. And I'm transferring them onto the hughhendry.com, narcissism.com website, where we have a blog page. So I'm working on that. We're tidying it up. We're putting again some nice graphics, some nice images that kind of bring up the spirit of what I'm trying to say. And so I hope to persuade everyone to go there. And if you go there, you can get a free copy of my Dawn of Chaos paper, which I wrote back in 2020. So
I thought you were going to say like a free t-shirt or something. I thought you were going to, I was saying, I've not got a t-shirt or a hat or something when this free gift is coming. Sorry, I thought we were getting like a freebie there. All right.
Chris, we are the gift that keeps giving.
Yeah. Well.
Right. Now let's look at Cathy.
Yep.
Because Cathy's ARK is on the wane. So we can see a stock price chart. Yeah, I can confirm that. And this is a bit unfair because this is taking the absolute high price in the ARK fund, which is, an uber leveraged technology in really investment trusts, a collection of passive investments, both listed and non-listed. And so it peaked around about $161 US. The last 2 years, it's gone from 160 to like something with a 6 handle. So it's lost over $100. It is being creamed. It is being absolutely creamed. And look, this kind of black or this heavy red thing is down again today. It's down heavy again today.
No good news for Kathy, huh?
Chris, you want to know? She. This is unfair. But she don't give a damn. She don't give a damn, honey. If I was talking to her off camera, she'd be like, honey, really? The size of that fund was, look it up for me, Chris, and confirm. But I want to say that the size of the ARC fund got to about at least $20 billion, and she'd have been taking like a 2% fee on that. It
went much bigger than that, because I actually read about this morning. Because believe it or not, people, we actually do some preparation for this. We do. We both do a bit of preparation. I do more than
you do.
No, I know nothing about this stuff. So you can do a lot of this stuff on the fly, but you also do some preparation. But anyway, ARC's initial and overall assets hit a peak last year of 61 billion.
61 billion. So
according to Financial Times.
So if she's charging 2%, I mean, God Almighty. She made $1 billion. $1 billion, Chris. $1 billion. I mean, that is Chase Manhattan the Third, or whatever he's called. You know what I mean? And money for old rope. Money for old rope. So, like if that fund closes, and what happens? I got it. There is a wisdom. So, how did she get to 60? First of all, how did she get to 61? So let's congratulate her. She did something. She was prescient in the timing of the launch of that fund. She launched it around about 2019, and it went from about $40 and it went to 170, which is to say it went up fourfold. It was a four-bagger, right?
Four-bagger.
She rode on the coattails of a cultural trend. And
Tesla,
and
basically things like Tesla, right? Tesla was one of our was one of our big ones, wasn't it?
And when you make money like that for the guy in the street, and with the whole publicity machine that gets behind it, it's incredible what you can do.
It says here, the annual expense ratio or management fee of each of ARC's actively managed EFTs is 0.75% or $75 per year for every 10 grand invested. Okay,
so I was being dramatically unfair to her.
But still, it's still a couple of $100 million a year. It's not exactly.
But roughly with those figures, she would be making $450 million.
Still, not bad.
So now, having dished her and stuff, I bet you it doesn't go much below 60. I bet you find that 60 will be the kind of magic line which most people have puked, and we'll see. But what I want to say is, what you find is that people. And what you find is people, the money that she made for the collective, right, with this four-bagger, I bet you she will lose more collectively for investors than she ever made. That's not her fault. That's to say that if you were to look at fund flows, there would have been, like, of all the money went into that fund, I want to say 1% went in there, maybe 5 to 10% went in there. I want to say 20 to 30% went in there, and I want to say 60% went in there, which is to say,
it's almost like getting on a moving. It's almost like getting on a moving train. The train's already started moving, and like the later you are, the faster you're running. But obviously, more people are noticing it at that point than they are when the train's still sitting in the station.
It's to say that if you were to take the weighted average price that investors have paid to buy ARC shares, you'll find that I would think you would find that it's probably about 130. That this is the mania stage, and that mania stage is people just can't get enough of it. So that's poor old Kathy. Let's look at my futures. Here is the S&P 500, and so we've come down from 4,800 to about we had a low tick of 4,200. So my mathematics I want to say so that's about 600 divided by 4,800, 12.5%. It's had a 12.5%. So it's in correction mode. NASDAQ has fallen more. So NASDAQ has high ticked about 16, let's call it 1675, low ticked at 1375. So that's 300, isn't it? So 300 divided by 1675. Yeah. So it's had an 18. So it's close. NASDAQ is closer to a bear market, which again is just to use the kind of hackneyed expressions of the financial press. So why has it had a greater pullback? It's had a greater pullback because, as I've been boring everyone on this thing, that the money, the bull market has been a function of about 5 stocks. Apple, Amazon, Tesla, fill in the gaps. Netflix would be another. And Facebook, thank you. And these are stocks which were deemed to be riskless, partly owing to how they performed during the confinement and the lockdown. That we had the greatest economic calamity to ever befall the world, and yet their profits not only were intact, but in most cases actually rose over that period. So they were deemed to be riskless, and so this is an environment where Apple traded at $3 trillion US dollars. Now that we had a meeting by the American Central Bank last night where they didn't dismiss the idea that they're going to raise interest rates for the first time since 2018. Probably they're going to raise interest rates next month. And also we have got this very pronounced and very linear certainty that prices are rising just now in the economy. We call that, some people call that inflation. I hesitate to call it inflation, but without a doubt, inflation as statistically measured by the bean counters is at 30, 40 year highs. Now, that's because we've had no inflation for the last 30, 40 years. And so anything makes it high. This is when dwarfs become giants. But nevertheless, I kind of know that March will be higher than February. I know that August will be higher than March. I know that December will be higher than August. It's to say the energy prices, rents, there's a whole plethora of things. And the prices of essential items are ratcheting up. And because you're absolutely forced, you're forced to put gas in your tank. You're forced to pay rent for your accommodation. You're forced to buy food, unless you're me and I just don't eat. And so you become a little bit like you're a serf. Like you're a bit like mic drop and why can I never remember Victor Hugo's name? But you're a bit like one of the characters in Victor Hugo's Les Miserables. You're feeling miserable because for some reason that you don't fully understand, all these things that you have to pay for have just got so much more expensive. And that's why Biden and the Democrats, and it looks like they're going to take an enormous beating. And so the Republicans were going to likely to seize the upper hand. So the politicians are saying to the American government, "Hey, do something, do something, And so they're raising interest rates. I would push against that and say that is they are being straw men. That they should push up against that they should be a weighing machine, and they should say yes, absolutely, we can see the power and the certainty that prices will be higher in 1 month's time, 3 months' time, 6 months' time. But actually, we think that's going to come at the expense of discretionary spending, such as what you spend on Netflix, what you spend going to a restaurant, what you spend going to the bar, what you spend going on holiday. That these things will probably come back somewhat, and that will be the countervailing measure. They're not doing that, and they are tightening the screw. So that's why the stock market's feeling a little bit uncertain. Bonds have been selling off. And these bonds are deemed to be riskless. And so as these government securities sell off, then you get an enormous correction. Heavens, I speak way too much. But you get an enormous correction in riskless assets.
No, but this is why we need more hedge fund managers like you laying it on the line and telling us straight. Because for anyone that's in Britain, I know we've got a lot of non-British viewers, American viewers, listeners, etc. There's a chef called Jack Monroe, and she kind of made a very similar point to what Hugh was saying, is that inflation sometimes is not a great barometer or can be skewed, because if most people have to buy food, or like the food's a big part of their spending, whereas if you're very, very wealthy, then it's a very small part of your thing. But if we're assuming the population is all uniform, then inflation can sometimes be a bit not as accurately reflected in the economy as it should be. And she made that point. If you look at some basic foodstuffs, like they've went up like 6 times, which is like huge for someone who's has to buy that stuff, whereas, so anyway, I thought that was quite interesting. That ties into, and another point I wanted to say was, I don't know if you've come across the graph showing Berkshire Hathaway against ARC's performance. And what's quite interesting is they start off the same at Q1 in 2020, and they go on widely different journeys. Our old sage of Omaha, he just keeps ticking away, just keeps on going. Whereas obviously Kathy's up in the stratosphere, then back down, and they end up at the same spot in Q1 22. So 2 years later, they start and finish at the same spot pretty much, but they go on widely different journeys. And that's kind of what you were saying. If you make huge losses for the clients, it takes you a long time to get that back. Whereas if you go steady, people actually think, don't maybe grasp it as much, but actually you've done them a better thing, because for Kathy to come back again, she has to have a huge year just to get back on parity.
Absolutely. The real genius in money management is never to fear making mistakes. Because remember, like we do have those sharp pencils forced at our spines. Clients can take the money back at not a moment's notice, but like monthly notice. And to have no fear of making mistakes, you have to have a very good system or whereby you don't lose a lot of money, because it just makes it so hard to make money. Like and I talk in the book, the dreaded book, but I talk about dig a shallow grave. I've been the night watchman, and I tell you, I've seen some things that'll make your blood curl. I've seen phantoms rise from those graves, but only the shallow in the new ones. The old and the deep ones, you never come back. So yeah. And talking of which, because in the slaughter of the innocents, we can't let that pass without, oh my God, where's it gone? Without obviously, to not name and shame, but Bitcoin has fallen likewise from about touching 70,000 to 35. It's halved since the end of last year. Why did it get to that level? It got to that level because I think the American SEC permitted some ETFs to the authority to actually own Bitcoin. And so they made it accessible. And so there was this notion there'd be this wall of money that would come in and buy Bitcoin. Again, the insanity theory of money, if you will. They're like, some people are getting it, some people are losing it. And that Bitcoin, I just want to say, so it had this high. It fell 50%, which I welcome, because I always say you need a lot of downside volatility. It creates a kind of negative energy, which then propels you much higher. This failure, it really is a failure at the same level. I mean, if I was to put that on a monthly, you'll see it more clearly. It's failed. It's failed at 70,000. That ain't good. That is, we haven't seen the future, but in terms of risks and probabilities, this second 50% decline,
So is the Hugh Hendry family office staying clear of Bitcoin then?
It certainly is. In the future editions, I'll tell you what was much better than Bitcoin. But ooh. I've got a great buddy in LA, and he's come into some money, and he's like, I'm buying Bitcoin. What do you think? I'm like, How
much money are we talking to come into? Is it into the millions? How much money is he come into?
It's nothing as crass like that. It's just someone where it's someone I deeply admire, who is entrepreneurial and has had him and his family have had to live the curse of being entrepreneurial and on the cusp of being cash flow damn poor,
right,
and business rich. So it's a big statement. And then to get this kind of financial security and then go, I'm going to buy Bitcoin. It's like, So I don't wish to inflame. God love you if you believe we're going to take 70,000 out. I thought the next stage for Bitcoin, when it had that correction, when it had that 50% correction at the first time last year, I can't say I predicted it, but I I had a lot of publications saying I thought we were going to retrace to here, and that would set us up for the move to 100,000. Now that we're back kind of at 30,000, I don't think we'll see 100,000. I could well be wrong.
It seems like other cryptocurrencies have sort of jumped in there, and because of these NFTs now, you can sell stuff, and it seems maybe like Bitcoin's a wee bit kind of. I mean, I am no expert here, but it seems like it's a wee bit unflexible. You know, it's a wee bit kind of the other ones you can sort of monetize a bit better because you can.
Nah. They're all the same. Let's go back to that chart.
There we go, people. That's me just been given the Hugh Hendry. That's it. If I was a junior analyst in Hugh Hendry's office in his Eclectica days, I'd have just been thrown out of the office with the door slammed in my face and told, "Get down to Pret and get me a coffee." Did you ever send people to get you coffee? Did you ever do that? Did you ever send like a junior analyst down to get you a coffee? Is that done in hedge funds, or is that seems crass?
No, it's done in the context of interns who are they're bloody waste of time, because they get paid on hosing down your knowledge. You're busy, and like hosing down, extracting knowledge is time consuming. So better to send them out of the office. The work's starting back up. But Bitcoin, LTC. So let's move on to the next chart. I don't even know that's another Bitcoin equivalent. What's the one that begins with an L? I don't know. Ethereum.
Yeah, that's a big one, isn't it? Ethereum's a big one. I've heard people talking about
that. Does that look any different to Bitcoin?
Not really.
I don't think so.
Litecoin. So LTC's Litecoin.
Litecoin. Never heard of Litecoin.
LITE.
It looks like it's going back to his grave.
Anyway, going back to old Cathie Wood and the Sage of Omaha, Warren Buffett, his Berkshire Hathaway. So he seems like the kind of dude that's always into these kind of like classic companies, and I mean like the Coca-Colas and I would have thought Levi's, but anyway, those type of solid brands. So you don't think he's delving into Bitcoin, Litecoin, and all that kind of stuff?
I'm pretty damn sure he's not. He is a bit like my first stomping ground when I was being classically trained in Edinburgh for 8 years, Bailey Gifford, whereby their principal form of risk control back then, I have no idea what it is today. Actually, they've actually gone. I mean, I can't say, I can only say this from the distance of a Caribbean island, but my impression is they've gone from the Warren Buffett model, and they've touched the void a little bit with Cathie Wood's, and it had been, as we saw with Cathie's one, it'd been extraordinarily good, but it's having a Icarus moment and coming back. But that's a long way of saying that they have sought to control risk through the selection of superior businesses.
Yeah, don't buy crap. Don't buy crap. Yeah, sorry.
Or, but sometimes you don't know what is crap. Crap is a kind of can be a Johnny hindsight. I mean, there are variables that one can apply. And so Cathie which is kind of longevity of business. And Cathie, of course, didn't have some of those variables. And it may be that amidst the present ruins of her fund's performance, that there are businesses which go on to become the mainstay of the future that Warren Buffett will buy in the future. But he's just not there at a risk level to take ownership just now. He's willing to forgo several kind of iterations higher in the share price before he gets a sense that, yeah, this is a winnable hand. So, for instance, he'd never bought Apple, and he very much the kind of anti-tech guys. I don't get it. I don't understand it. Coca-Cola, I consume it. I get it. I don't have an iPad. I don't have it. He's an old guy. But the genius is Apple then, after many, many years, established that it was pretty much the best company in the world. And you know what? He's like, I get it. And he bought it. So, he's malleable.
Exactly. You've got to be, haven't you? I mean, in your game, if you're too rigid, then it's like you say, you've got to be malleable. But I mean, that was one big thing. Wasn't it? We talked about many times. Your centipede. You cut off a leg. You would denounce things that you saw yesterday. So you were like that, but you were more malleable than Warren. Is that not right? I mean, you were you could do it in a shorter space of time in terms of changing your mind and seeing things differently. You weren't quite as sort of baked in long term as him.
Yeah, but I made mistakes, and I've got an example of me making mistakes, which I've got to find for you. So again, this is notionally these conversations are meant to revolve around the Eclectica monthlies, and
Yes.
I'm relieved to say that we have finally left the confines of 2005 and into 2006. That's the only good news. The bad news, 2006 was the first year of an annual loss that I've recorded.
Brutal.
Which is boring.
Yeah, I don't think
Boring
it is
whatever.
boring. I think also it's good that I think a lot of people can learn more from the failures, or not the failures, the setbacks, than necessarily always the positives, you know?
No, that's very true. So here we are. You see the monthly
Table,
the
yeah.
annual table.
Performance,
Yeah.
yes,
So
we do.
We're 2006. So actually, maybe later edition will go back. What was I doing in January 2006? Because 12.7 after 2008. I never had a year where I made more than 12.1. So I
It's
made,
also
and
your
so I
best
made
January
that.
ever. It's also your best January ever.
Yeah, I mean that's an exceptionally good figure. I'm not quite sure. I'll look back on that, but this is the shame. I lost 3.7% for the year, and the responsibility for that is my responsibility. But that was damn EMI. That was the biscuit. But more on that later.
Or in the B word. Or in the B word.
In the B word. Yeah, I was trying to again channel my paradoxical thinking. Wouldn't it be kind of funny if the chairman of the Federal Reserve had now become Ben Bernanke, and in 2002 he had this famous helicopter speech. The United States cannot have a deflation or a depression because we will use the mechanism of a helicopter and we will just drop money all over the country. And that kind of coincided with the low after the NASDAQ sell-off. I'm calling it the Zen and the art of helicopter maintenance, because that's just how my mind operates. But, he was, for the longest time, he was a ranking. He wasn't the chairman. He became the chairman, but he was obviously the one that was going to succeed Greenspan. And we called him Weimar Ben, because he was the guy that was going to create. He was going to destroy paper money because he was going to create it in bundle loans. That was when we didn't understand money. Money is created by banks, and I think it's in this paper. Do you know that the 10 largest U.S. mortgage banks, they were increasing their bank loans at 40% a year in that kind of bubble, which was house pricing.
A year.
Now, that's 40%. Money print. Whoa. That's money printing, right? That's money printing. That is extreme risk-taking behavior. That's something to take serious. That figure has been a bit like my January 2006 to 12.7%. That's never been seen again. Bank lending. I saw, I think Bank of America is running close to 10. 10's a big figure just now. And bear in mind, the economy's in real terms, what do you purport? If we use 10-year break-evens for inflation, the economy is kind of growing at 5-6 nominal. So bank lending being at a clip of 2x the GDP growth is notable. It's certainly something. If that's to accelerate, then actually, we might actually get inflation. Anyway, I was kind of saying, hey, wouldn't it be funny? Wouldn't it be a paradox if? Let me bring that screen back up. Wouldn't it be a paradox if the guy that we call Weimar Ben think, hey, look, I think there's going to be an event. I think Ben's going to be in charge. I think he's going to take rates to zero. I think government bonds are going to go to the moon, baby. And I think gold and it's going to collapse. And there'll be Schadenfreude. You'll have Schadenfreude if you miss the first cycle. But actually, rather than selling the stuff, you should be hoovering and you should be buying it up. You see that young me?
Well, we can see Brad Pitt when you put the picture of you up.
So gold here has halved. So I'm on CNBC and they're like, Hugh, gold just made a new high in sterling. Like, should we be buying it? And everything I prophesized in this page of narrative, which was written in January of 2006, Okay. Everything you got to read the page, Chris. Everything that I had mentioned had come to pass. I'm a genius, not an investment genius, but I could see twists and turns before they happen. And
you're the man who sees around corners.
So let's get back to when I was doing that CNBC.
And anyone listening to audio, please, like I say, please go on YouTube and you can see these charts. And Hugh, obviously, well, as he's talking about them, you can see them. So it makes things a lot easier on you.
So here we are. This I'm pointing at the late summer of the calendar year 2008, and gold has high-ticked. It's just gone through 1,000, and that's a critical level. And everyone's like, "Woo!" And Citigroup and others are saying gold's going to 3,000, and I had come out of gold. I was like, "There's no you don't get linear, but like we discussed with Bitcoin, you don't get linear progressions. You get enormous." Gut churning, St. Peter rejecting Jesus 3 times. Gold going to 3,000? Nah. And you believe that 3 times. Bitcoin going to 100? Nah, you've had it 2 times. Maybe you get it a third. And gold in the financial devastation of which followed the Lehman crisis, it fell from 1,000 and it low ticked at about 670. It fell best part of 45%. That's Chris. That's me.
Yes, that's you.
And I'm being very impassioned. I'm saying, no, gold's gonna halve. It's too populated. People have got to give up. I mean, I am so annoyed. And why I'm laboring this point is, so before the event, there's a mosey. I'm going to kill the mosey. Before the event, I predicted it happening, and I got half of the equation correct because I had cut my commitment to gold, whereby when it did fall 45%, it was no big deal. And I was very quick. I think I got it. I was very quick to sell it, so it didn't really do me any damage. But when I should have been buying it, let me show you that chart again because it still rankles with me, Chris. Forewarned, this is me being St. Peter. This is me denying Jesus. I should have absolutely filled my damn boots in December of 2009 with gold. And if I had done that, I would have seen a threefold rise in the value of gold over the next year. And I would have become a hedge fund legend. I would be managing the money that the Rokos and the Chase Manhattans of this world manage. Where is it in this very long-term chart? Because again, look, it came back and it high-ticked the 1981. So this was the great bull market in gold, and we came back, and that's what prices do. This is the predictability. This is the cardiogram charts that you need. I know all this. I know this shit, Chris. I should have been hoovering up gold, and I did nothing. Shame on me. What I was saying was I was comparing it to this point. Gold halved in the 1970s from 200 to 100 and then went to 800. And so I foolishly thought we were going to come down to here before going to there.
Can we ask, back at this time, how much debate was going on in your mind? Would you be talking to people, or were you churning this around your mind? How difficult a decision was it for you not to buy more gold, or were you very set on what you were doing? Maybe can you remember your mental sort of thought process at this point? Because that's probably what people are wondering. How did you come to that decision? Although it was wrong, how difficult was it to come to that call?
Well, I mean, look, there's me. There's me talking about I'm emptying my mind. I'm saying, like St. Augustine, I want to be virtuous, but just not yet. You loony, you loser, you absolute loser. Sorry. Oh, that damn idiot, just smug. That's what happens if you wear suits and you have that stupid voice. Hate that guy. Not the presenter, not Jeff, me. No, what I mean by that, Chris, is I'm pouring the internal workings of my brain. I can't. That's what's fascinating. We can go back and we'll put a link. We'll put the link on the YouTube pages, and you can go and watch that with the actual volume and listen to it, depending on my editing skills. And what? So you can go back to a date in December of 2008, and you can hear me revealing all the clutter and the noise and the thinking in my head. That's there. So and it haunts me.
And would you do a lot of that in the office, or was this like spontaneously? People might ask you questions and you would start talking. Obviously, that was on TV, but would you sit in your office, or was it hard to do it in your office because you were a sort of head man, and I guess people were looking for you for direction, so they probably didn't want you coming asking for them for direction. It's a wee bit kind of
Yeah. Well, I'll tell you how it worked.
Who's captain of the ship?
The captain of the ship spent most of his time below deck with the logbook, with the maps of where we were going, and below the deck meant I was at home, playing punk rock or whatever. But I'm sure you've seen my wonderful ex-investment partner, Tom Roderick. There's another one that you haven't seen. We were like, there were at least three of us. There were definitely more.
Is that Careless Whisper?
That's Careless Whisper. That's George, not George, dearly departed, but George Lee. And we had fun with Mr. Lee when we had big investments in Korea, but that's another story. But the two of them were tuned into my wacky wavelength, and believe me, no quarters were spared when they thought I was on a loser, when they thought I was, I wasn't firing in all cylinders. I love those guys. They were my investment wives, if you will, because they had the audacity, they had the courage, they had the confidence, they had the super smarts to say, "You're wrong. You are wrong. And I'm going to tell you why."
Would you ever go home angry? Would you ever go home thinking, "Oh, fuck," sorry, maybe I can't swear in this. Would you ever go home sort of unhappy and angry at them, and and then obviously in the morning you wake up and go, "You know what? I'm glad you told me like that." Would you storm out I can't imagine you in those days taking it too well, being told you were wrong. And I mean that with respect. I don't mean you couldn't accept it. I just mean you're quite combative. So I'd imagine you'd come back at them with your feelings on
it. Absolutely. I'm hesitating because I'm trying to do two things at the same time. I got a WhatsApp from my 18-year-old. She's going to be 18 into this month. Great kid. And she sent me a quote. The most dangerous interaction in a household is between the father with anger issues and stubbornness and the eldest daughter with the same anger issues and stubbornness. So my hedge fund career, I was angry. I was angry at myself. I was a perfectionist, still am, never happy. And regrets, I have a few. I have more than a few. This damn mosquitoes back. I have more than a few. The regrets I have is that anger with myself I brought it home with me. I mean, like I said to you, I spent an inordinate amount of time at home, and I polluted the relationship.
But even you said you're on holiday. I mean, you told us about that lovely place you're on holiday in France, I think it was a couple of episodes ago, and you were saying that you'd love to go back because even you go to these luxurious places that obviously loads of people would dying to go to and cost a fortune, but not so much that. Great experience, but you wouldn't enjoy it because you'd be worrying about, or you could have hedge fund business or stuff in your mind.
Yeah, absolutely. So that's the soul repair. That's why I'm
catharticism. I can't. That my accent. I'm struggling with that word. Is that the word?
No, I think you nailed. I think you nailed that. So I thought, if we let's try and we want to do your spin the wheel thing, and then I want to do one last thing because
spin the bottle.
Actually, so we jokingly refer to this as stock porn, and of course then the YouTube algo, etc. Then just kind of like
we got a letter. We got a letter from Palo Alto.
It's like, don't mention the medicine and don't mention porn. Anyway, so I thought, given that we'd labored the point of corrections, and Marcus are correcting and may in fact enter a bit. We're very close to. We're tentatively on this presumption of a bear market. So I thought, let's take the Dow Jones. Why the Dow Jones? Because there's only 30 stocks and we don't have much time. I have not looked at, and I can't rotate. I'm going to have to just physically kind of like work my finger. But let's look at, these are long-term charts. I want to say that we are looking, if George is, he knows my mind. So I think that would be a 20-month, 63-month and 200-month or 250-month averages. So, that's like taking lots of data and just averaging over a long time, so that the price of Apple would be 31, which is to say that Apple, like Kathy, in the last little 3 years has had this enormous, is it Apple? I'm saying, yeah, it's Apple, right? So were that to correct, were that to have a bear market, well, let me put it on. If Apple traded at 130, I think it would be a steal. Yeah, if it came back, if it had that kind of correction, I think it would be a steal. I don't know these names. I'm guessing that's Amgen. I'm guessing that is a pharmaceutical stock. What's interesting there, Chris, is that even amongst the carnage of financial markets, that stock is up on the month, still intact. So it is subject to different things. AXP, is that?
I'll look it up. I'm on it. American Express.
Well, look, I mean, there's no bear market in American Express.
Accepted everywhere. Is that accepted everywhere? Apart from places it's not accepted.
It's up on the month. So there's good stuff happening in the business dynamics of America. So what could that be? That could be this. The thing that's pulling markets down is this notion that people are flush with cash, people are spending, and they're going to keep spending. Okay, and if they keep spending, whereas I'm saying to you, I think they'll reach a point where they'll pull back, and they won't be able to afford the discretionary expenditures. This chart's saying, Hendry, you're a loony. So we'll see. Here we've had now I think that's Boeing. Pretty sure that's Boeing.
BAUN.
Yeah, it is Boeing. Boeing collapsed. That was the travesty of those the new planes at 737s, was it? The ones that we had.
It was the 7. It was the 7. Actually, I did in my other life, another side of work. I did a piece on it. Yeah, 787 Dreamliner had a lot of problems, and yes, and basically I spoke to a lot of people, and they said actually they feel like a lot of insiders feel there's root problems in Boeing as a company, but that's a whole different story.
Boeing looks a great buy here. Now, bear in mind, so it had a blip, a glitch. We're going to do an episode on glitches. What you want to find in investments are great businesses that have suffered. Actually, when I talk about this, bloody hell, I should be really, really long Boeing. Boeing is a business. There will be a Boeing in 30 years' time. In 30 years' time, most likely, there will still be two dominant manufacturers of aircraft, the other being Airbus. And Boeing's had a glitch. The glitch, I showed you the chart of Apple, and the average monthly price of Apple, I think, is $170. But if we went back to the very, very slow moving average, this red line, the moving average for Apple was 30. Imagine Apple traded 170 to 30. That's what's happened to Boeing, right? Would you buy Apple? If it hit 30, probably. And so it then rallied off that, and it's now had like a 50% correction. That's natural. My God, I'm salivating over Boeing. That is, in terms of, that's so, in terms of who I was, the asset capitalist, the manager, if I was sitting at home and I was playing music and I had candles and, and I was thinking, I'd be like, I've got to commit a lot more time. In fact, I would buy it. I'd buy a small amount, and I'd say to George and Tom, like, tell me more. Caterpillar, hey, if you got a commodity, there's a shortage in commodities. I mean, the world needs more copper and everything else. And to get copper, you've got to dig it. And these are the diggers, right? And they are vertically integrated. They have systems under the ground, conveyor belts and stuff. These are the picks and shovels. So there's a bull market in extracting commodities, So forget corrections. That is in another space and time. This CRM, I would imagine that is a technology. That's a software company, I'm guessing. CRM. I hope this isn't Salesforce.com, right? So just that kind of looks like a correction. It's had a deeper correction than Apple, probably getting to the point where it's corrected. You'd be interested in buying it. We are looking at Cisco, a mature. Cisco now is like before we had all this proliferation of technology names, we only had IBM. Cisco's like a kind of IBM now. It's kind of this generational technology company. Looks fine. Now there's a bull market. There's something really exciting. New price highs. I always get lit up on new like this. Like 1, 2, 3, 4 months ago, we broke out of a 5-year, 4-year trading range. What are we looking? CVX. I think that is
Chevron.
Oh, that's Chevron oil. And remember when it was down here, Chris. People hated Chevron. What did they like? They liked Peloton. That's why you've got to try and scrub your mind of the biases which are in financial media. What are we looking at here now? Disney. Disney's a fantastic company. Like coming back now to, it was almost, you were almost able to buy it a smidgen above where it was in 2015, 6 years ago. Oh, give me Disney at 2015 prices and I'll take the risk. I'll be able to hold it. They've
also got Disney Plus as well now, haven't they? Another added sort of string to their bow.
Yeah, I suspect it's down here because they are at risk of over-investing in content to be like Netflix so they're over-investing on the basis of inflated expectations created during confinement, and then Netflix has just dropped a bomb, and so like rational investors saying, we thought you were going to be the next Netflix as well as everything else you are, and now we're not really sure that being the next Netflix is a great thing, so we don't know.
Yeah.
So the market's becoming circumspect. It's correcting. It's taking. So if you will, this is a waterbed filled with sanity and insanity, and the more you correct down to these slow-moving averages, that you're extracting the insanity, and it's time and you're finding wisdom. And typically with wisdom, you start wanting to take a risk position. Dow, this is a chemical company. I don't know why this data is limited. It's probably split. It's had a correction. It came back again to the slow moving averages. It's probably a buy in there. Goldman Sachs, the squid. The squid dropped a bit of a bomb. I hate the squid. Who cares? And then Home Depot. There's a risk here that, this trend is, I think this is a linear scale, so it's a little bit exaggerated, but, since 9 years ago, this thing's gone from like less than $50 to 400. It's gone up 8-fold, and it's a home, it's a home retailer. You buy timber, etc. Now, clearly with confinement, there was a boom in that spending as home improvement. There's nothing else you could do. There's more insanity, if you will, here than here, and certainly there. I could not afford the risk of insanity in Home Depot at those levels. Let's forget that there's not enough data. I think that was Honeywell. IBM, I think I mentioned IBM before. If IBM can break this 2013 level, and we mentioned it before because it was tantalizing, the good old Dr. Messner, Austrian psychologist who mesmerized the court of Louis the whatever with his ability to mesmerize people. I thought we were going to take that out. I want to buy IBM. I'm imagining that's 150, 160. IBM, if it does that, IBM's going to be 250 in short order. Intel. Intel's been a dog as a technology company, has been a dog, but there's no inflated expectations. People just think it's doggy. So I kind of like entering kind of doggy parlors. I don't actually, but anyway. That's Johnson & Johnson. These are deemed to be riskless, given the vaccine and the medicine, and we're all having to get boosters after boosters, and they're all finding a means to play that. JPM, banks. So the idea that on it, so we don't see the carnage of 2008. We see obviously the ramifications of the COVID, the global close down. We bounced back from that. The economy's recovered, it's healed. And now people are going, oh, well, if interest rates change and they now climb higher, that's good for banking profitability. They haven't made their mind up. They won't make their mind. They will need 10-year treasuries to exceed 2% for that to happen. That hasn't happened yet. We are KO is Coca-Cola. Coca-Cola, nice trend, not exponential, kind of safe, kind of dull. Fine. I would, if I had to own a stock in, if I had to own like 8 stocks in the Dow Jones, Coca-Cola would be one of them. Yeah, I'd want to balance things which are escalating with things which have had these corrections. I'd try and balance the two. McDonald's, again, is like Coca-Cola. So McDonald's actually had an absolutely wonderful, if one can say that. Can anyone have a wonderful COVID experience? McDonald's did, drive-ins and stuff. So kind of like a detached form of Deliveroo or what do we call it? DoorDash.
DoorDash, DoorDash, yeah. That's the American version.
And unlike Coca-Cola, maybe the accelerated nature, it probably would feel a lot. I think you'll get to buy McDonald's at 200, but what do I know? Here you've had a correction. Triple M, 3M, so you've got a manufacturer.
Is that those people that do like the adhesives and all that stuff you put in the wall, like they kind of stick up?
Yeah.
But yeah.
Huge, and stick it as notes and Scott. Yeah. I mean, fine. There's no great expectation built into that. And if we got this kind of golden crossover, that would be a sign that momentum was picking up in its favor. So I'd be watching Triple M. And here, Merck, another drug stock. These things safe, kind of boring, going higher. There's a place in the role for that. Microsoft, we talked about last week, just made a 70 billion acquisition in the games area. It's this is 10-year bond yields going to zero, and this is what happens. Microsoft is a riskless business. It's probably trading too high just now, and if current trends persist, which I think they're likely to, I think Microsoft will gravitate into an environment between 200 and 250. So just not knowing anything, Chris, or just a little bit of prejudice, there's so much I can say about these charts. Nike, I've got 2 words, Coca-Cola and McDonald's. It's the same thing, probably has to correct a little bit. This is Procter & Gamble. If you own Procter & Gamble, you're like, thank God we don't own Unilever. That's about all we can say there. This is something, there's action happening. I can feel energy here. I can feel this wanting to propel itself higher. I don't know, is that TRV?
I'll check it.
What is
TRV?
It's Travelers Company. That's an insurance company.
Right.
What is Travelers getting there? Travelers is getting, I'm not sure, because they would own a bucket load of bonds, and there'd be a danger that bonds lose their value. There must have been an underwriting cycle. I'll come back on that. That's intriguing. I don't know the answer to why that looks as if it's going higher. It looks as if, to my mind, I think you're going to get, so it went from 75 to 100, 75 to 130. I think there's about $50 of upside. I think it's probably going to closer to 200. That I want to say is a hospital management business. It's kind of it's medicine bull market. And then V. God, I should know what V is. What a klutz. V is Visa. Visa, of course. We looked at American Express. And if we had PayPal in there, I mean, anything to do with money, is in a bull market. Verizon, so boring telecoms, just boring. And Verizon has a lot of debt, so actually it's a boring business, but it's got a very unboring balance sheet, and that's a kind of weird combination, which leads to going blah. Here's something which has been really appalling relative to everything else. What is WBA?
Walgreens. It's a pharmacy.
Oh, Walgreens.
Yeah, pharmacies. They own Boots in the UK.
I was going to say, and in Guy Hand's book, he correctly points out Boots should be such a great business.
Everybody knows Boots in the UK. And anyone that's not in the UK, if you go to any British town of a certain, not even a big size, there's always a Boots, and it's always busy.
But they know that in the context of Walgreens, there's a Walgreens. And we must be near the end. I hope so. Walmart, they're boring bull market. They execute well. And we're done. Oh my God, we're done. So Chris, let us be done. Let's do. But anyway, you get the message there, Chris. That was an exercise. I haven't looked at those. I was looking at those charts for the first time. George, my former colleague, sent me them yesterday. Thank you very much, George. But you can see that's the asset capitalist. That's what I was doing back in the day, and I still have that. And so now I've got to, if it was back in the day, I'd want to know about travelers, and I'd want to know what it is about the insurance market, and because people like me, outsiders, are getting a little bit horny for travelers, and I'm like, I'm like seeing a crowd behind the velvet rope. I'm like, what's going on inside? Yeah, I want to get in there. What's the story? And so I need the guy to turn around and say, whatever.
Well, that's maybe one for us to follow and various episodes as we go on. Maybe that's something we can do. And it was great for that Hugh to do that. So that's people, you've seen an insight now. So if you want to base your 2022 portfolio, Hugh's given you what he'd be doing, a leg up on his. And we will now quickly go on to the asset capitalist Wheel of Fortune. He picks a number that represents a word in the dictionary, and then Hugh tells us a hedge fund story related to that. So Hugh, number between 1 and 59, please.
59.
59. Oh, you're going 59, right? Okay. That is maps. Do you have a hedge fund story involving a map or maps?
Oh, God, it takes so long. I mean, just doubling back on what I was saying, rather than be your portfolio, take your own responsibility for your risk portfolios. But what we can do with that exercise is we can revisit that exercise in 6 months' time, or at the end of the year, especially at the end of the year, and we can see if anything so I made some predictive claims there. Let's see how many of those claims work out to be kind of close, like half right.
Yeah, exactly. We can that's the beauty of this. This will be up online, so we can actually even see what you said, word for word, verbatim, shall we say.
And maps, I think, Chris, we've taken up so much time that I think I'm glad I chose maps, because I've just looked at the maps. I said to you earlier that I was, the captain. I spent most of my time below decks and looking at my oceanography and my charts, and we've just done that. So you can see that actually I was a pirate. I was the captain of a pirate ship, and I've just shared with you the maps. I think that's suffice given the extended nature.
It's almost like when he knew that was going to be number 59, but he didn't, people. I don't give him any. I'm behind him with a sharp pencil. I don't give him any leeway on these things. So yeah. Anyway, people, we are out of here. Thank you very much. Please leave all your comments. YouTube, Twitter, Instagram. We want to hear from you. Get involved. Thank you very much. We will see you next week.